Good day to one and all. This is Dr. Sivaraman of analysing.com. I went my earlier webinar, the twin webinar I give every month, tracking the forex market together. Part 1, I gave it between 8 and 8:45 GMT. And today we are on September 15th, 2015. Between 14 and 14:45 GMT, I am going to give the part 2 of the webinar. I will also show you what happened to that of the live positions I had taken during that of part 1. And then we will try to track the market using a simple market tracking technique and also use the trading strategy to limit the risk and maximize the profit so that we'll be able to earn consistently from that of the market. So normally I give the forecast every week on Monday between 5 and 5:30 GMT, the forecast for the entire week. And then followed by that, I do the review of the forecast on Thursdays. But this once a month twin webinar, I focus on the trading strategy, explain in detail how exactly the trading has to be done. So to start with, I will show you the results of part 1 of the webinar. I had taken some position explaining the reasons for taking such positions and then show you the profits, how exactly they were all closed by end of the European session. So I took the positions during that of the early European session and closed during that of the late European session as swing trade. And that swing trade, I closed it within the session, and that could be called as the session-wise swing trade. And I was explaining during that of the session that whatever they do during the early part of the session, opposite to that, they are expected to do it during the late session. Exactly, they had done it that way. And near that of the low, I took the sell position. I used only the live market put page to take the trading decisions. And I was telling you that they just firmed up during start of the European session. So, but the market is relatively subdued today because the volume is relatively reduced. All are waiting for FOMC outcome, which could happen on Thursday. And because of that, the volume could have come down. And as a result, the players are just making small swings in the market. So I took a sell position here at 1.1313 with the hedge order at 1.1343. You can see the high was only 1.1328 and they are not hedged me. And it came down. And while it was coming down towards close of the European session to 1.1298, I closed it with 15 pips profit. Then the GBP, I took the sell position at 1.5436 and they just quickly went above that of the initial high for about 2 pips and 1.5457. They formed it as a high. My hedge order was at 1.5436 and 30 pips away from that of the sell position. And once they started making that slide, I could stop at entry, remove the hedge order, and then subsequently, by end of the session, as I explained, that what they will be active during that of the early and the late sessions in the majors. So by late session around 12:55, I closed to the position around 53.88 with 48 pips profit. And now they are making for the slide here. The case of GBP, they cut the new low. And once they cut the new low, 1.5383, and coming down, that indicate before that of 14 GMT. So that indicates that they do not want to firm up during that of the US session. So it is an intentional move on the downside. So any firm up, we should be able to sell. That is how we do the market reading. And now in the case of USD-Yen, 119.43, I kept the limit order. The low was 119.45 at that time. They made a small dip, and at that time it got filled, and they came down to 119.41. And I was telling you that USDN, after visiting that 119.50 area, they are expected to go again to 120 and above. At the moment, you come across that they are making the contrarian move. USD Euro is coming. Euro is showing negative net change. GBP is showing negative net change. And also USDN is showing negative net change. This is contrarian move. When they make a contrarian move, they will not make any big move like 75 pips, 100 pips, etc. And it will be a small swing in the less volume condition. Also, you come across the contrarian move among the commodity pairs that USD CAD is showing negative net change, and Australian dollar is showing negative net change. That shows very clearly that they are making the contrarian move. USD CAD is making the USD weakening move, and Australian dollar is showing USD gaining move by showing negative net change. So here again, Euro is showing the negative net change, USDN is showing negative net change, GBP is showing negative net change. So all the three are showing the contrarian move again to handle the end crosses. Then I booked the profit around 119.89 with 46 pips profit. And USDCHF, I took a buy position at 96.95. I was telling you that 96.92 was the initial high, and they stayed above that, and they are likely to go up, but the move was very slow. They went up only to 97.13, and I closed the position at 97.09, and with 14 pips profit. So you can understand that I took the trading decision broadly based on the forecast. Then besides, I did the market reading to fine tune the forecast and took the position. In all positions, I was able to book profit. So you can understand that if you read the intentions of the player, we don't require that of any of the other sophisticated analysis. We can find out whom they are going to trap, and accordingly we can take our positions. So first of all, in order to effectively make our trading decision as quickly as possible, we need to have the derived forecast. See, after 12 years of postdoctoral work in the various markets, I developed an algorithm, a sequential statistical calculations, and with which I am able to give the forecast of the market. And I'm giving it free of cost in FX Street for that of the small traders who could get the benefit out of that. And this week on Monday, yesterday, that is 14 September, I gave the forecast for the entire week. And today I was telling you that they will be making the slide during the European session and a small firm up during that of the US session. But after getting the forecast, we fine-tune it using the initial lows and the highs, what they are set in the market, so that we'll be able to find out whether they will firm up or rise, or they may not firm up and make only the variable moves, Euro making a small firm up, GBP making a dip, and that sort of contrarian moves, they could do it. And market reading, the first one, we go in for the net changes. In the net changes, we come across the contrarian move. So when they make the contrarian move, it is not advisable to take positions in the case of majors. Instead, we can take positions in the crosses, because whenever they handle the crosses, they make such contrarian moves. But in order to understand what they are trying to do in the market, we will compare the initial lows and the highs, what they are set around 3:30 GMT during the Japanese session. The entire day market consists of the Japanese, European, and the US sessions. And the session timings are given here as well. Session timings are given here. Now 13:30 the US session starts. Now we are on 14 GMT, 30 minutes past the start of the session. And after around that of 14 GMT, till that time, if they don't breach the lows and the highs, then we can take a buy position near that of the low and sell position near that of the high as a swing trade. But what has happened in the case of GBP, they just breached the low, again, whatever the new low they set. Now, comparing to that of the initial lows and the highs, now is trading, they just breached the initial low, came down. The high was also breached by about 7 pips and came down. So they are just making either way stop-ins on the high as well as the low and holding in the middle level. So there may not be much headway on the upside or on the downside in the case of euro. So there is no point in taking a position here. In the case of GBP, 1.5418 was the initial low and 1.5432 was the initial high. They just breached the initial high about 25 pips, 1.5457, and then started coming down quickly, breached the initial low, but staying below the initial low now. 1.5383 and holding around 1.5383. If they don't come above in another 30 minutes to that of 1.5418, then it shows there is an intentional move on the downside. If they come, then make an intentional move on the upside, shows, and also cut the new low, then that shows it is an intentional move from the European session. They made an upward stop, and from there slowly they are making a downward move and cutting the new lows every 30 minutes, and they could slowly slide down. So in order to confuse the traders and also to handle the crosses by contrarian move, they may hold euro and make the slide in the case of GBP. As a result, euro GBP will go up. So earlier we have seen euro GBP was coming down, and now they will make a small form of move before making further downward move. In the case of USD they just breached the initial low 120.18, came down to 119.41 and started gaining the level. After making a quick downward move, in order to make a contrarian move on the downside, they are slowly expected to make a form of move, but it is in the middle level. So when they are in the middle level, they may not either rise or drop. So if we commit a position in the middle level, and that too when they are handling the crosses by making a contrarian move, we may not have any headway on the upside or on the downside. So it is better to avoid taking position. Then GBP, we can take a sell provided they don't come to the top above that of 54.18 in 2 hours time frame. To confirm that they have done the extended downward move in order to make a rise. And in the case of CHF, 96.77, they breached and came down to 96.70, and then they are holding in the middle level. And 96.92, they are just breached and staying above. So any dip is a buy opportunity, and they're expected to slowly gain the levels in the case of USD and Canadian dollar. So far, they have been keeping it in the negative net change, and slowly they are firming it up. And 32.50, they just breached it by about 23 pips to 32.27 and 32.64. They had come to the high. They came down. They went up to 32.67, made a small upward stop and for 3 pips, came down, reached the low, and came down another 25 pips, and now they are firming it up again. So that shows that they wanted to make either way moves in a narrow range. And simply in the case of Australian dollar, they breached the initial low 71.23 and then came down and went up, but they did not breach the high again. And now it is holding below the initial low on 0.7123. So they can take a sell position, and it will, for another 30 minutes, if they stay below 71.23, we can take a sell and they will come down further. So here in the case of Australian dollar, we can take a sell position when they make a small form up in another 10-15 minutes. And similarly in the case of GBP, we can take a sell when they make a small form up and not going above that of the initial low. Euro and yen we will avoid, and CHF we can take a buy at this point. In Canadian dollar, they are making either way stop and not much of a headway they could make. They are handling the commodity crosses by making a contrarian move here. So this is how we take the trading decision over there. Now coming to the forecast, now they are expected to make a swing and firm up move during the US session today on 15, but it is unlikely to firm up in all the numerator currencies. So they are going to make only a sideways move in the case of Euro and USD Yen. GBP, they could make a slide, in fact, against that expectations. So they may make a firm up move tomorrow during that of the Japanese session, and then firm again or rise during that of the European session, make an upward stop and start making the slide. And you know, FOMC is on 17th, and so they wanted to make a drop before that, and they wanted to build as much of sell positions at the higher level. And later on, they are expected to make a drop from the European session onwards. That is 17th. Then afterwards, they will make further drop during the early part of the US session and firm up in order to trap the last minute sellers who sell after the drop as a technical trade or a breakout trade. Then they will trap and just induce them to do the short covering. Afterwards, you will come across again the drop on Friday. That's what will come across in the market based on the forecast. So now I'll go to the explanation for this session. So we require the derived forecast and also the market reading using the initial lows and the highs set around 3:30 GMT. And also we use the trading strategy to limit the risk and maximize the profit. And in the case of the US trading platforms, they don't offer the hedging facility. So how do we trade in US platforms? And especially this is the US session, so I cannot explain about the hedging there, which will be irrelevant because most of the US trading platform for the US citizens, they don't offer the hedging facility. In the event, the US traders need to become smart traders in the sense they should be looking for quick moves to happen in the market as an opportunity trader. And when they are making sluggish moves like this, it is better to avoid taking any positions so that when you keep the stop as a tight stop, they may hit the stop during either way swings. And whenever they are making contrarian move, avoid taking position. Whenever they make a clear-cut demarcation, that is USD gaining or the USD weakening move in their net changes, you take the position in line with that of the net change, we'll be able to see 99.9% the profit in the trades. So as US traders, in the absence of the hedging facility, my humble suggestion will be that whenever they make a contrarian move in the net changes like this, avoid taking positions. And then secondly, you always try to take the position whenever the quick moves happen in the market. So suddenly if they make a quick rise during session start time, then stop cutting the new high for 10 minutes, take a sell position. Quickly they will make a slide and you can book profit that way. So that even if you keep stop for 30 pips, it is very unlikely such stop might be hit, provided you wait for such quick moves and then enter into the market. So once they make a quick upward move, stop cutting the new high for 10 minutes. That shows that they wanted to make a slide afterwards. Hold near the high, and less than 30 minutes, they will make a slide and you can take a sell and keep the stop 30 pips above. Once the position start making the profit, you keep stop at entry and then you can just trail the stock in a profit-making position. So that is one way of avoiding the hedging when it is not available. Then always note down the initial lows and the highs. It might be difficult for the US traders to note down the initial highs and the initial lows. They set around 3:30 GMT, which I showed it during the Asian session. the initial lows and the highs on a daily basis, if you note down, you'll be able to understand which direction they are making the moves in the market by comparing to that of the yesterday's initial low and high, and then following day's initial low and high, you'll be able to find out what sort of contrarian move they are making in the market. Then always keep in mind that market starts from that of Japanese session. Don't try to follow the local time for your trading decisions. And you know what happens when you use the local time? You do not understand that the market is 24 hours. And you fail to think that market would have done the extended move or the intentional move during the early part of the day. And yes, it is the final session. And during that, we'll come across either continuation of the move as an intentional move, or they may do opposite as an extended move. So that you should be able to recognize and accordingly take positions. For that, you need to know the type of moves they are doing. The stop is a move which they make above the initial high or initial low for 30 minutes for about 10 to 25, 15 to 25 pips, and reverse in less than 30 minutes. Then it's a quick move on the upside or a downside and reverse, and that is referred as a stop. False move is the one they come up to that of the high and reverse it, or up to that of the low and reverse it without breaching the low. That is actually a pretension. They try to pretend as if they are going to drop and quickly reverse and breach the high and go above and then further upward. So the traders who are watching it, when they make a drop, and especially when they go below that of the support, then immediately they think that, okay, it is going to have a breakout and take a sell. Afterwards, they just quickly gain it. Because in the market, when it is manipulated, they always pretend as if the market is drop and reverse. And they pretend as if they are going to rise the market and drop. So always they create the market sentiment and act against it of the traders, especially the quick moves are to create the market sentiments. So all such quick moves, stop and false move and extended move, take the contra trade. And the intentional move is the one which happens for 2 sessions on the start of the 3rd session. Then you try to do in line with the market move. As I told you, JBB, they wanted to make a slide. Australian dollar, they wanted to make a slide. Euro, USDN, they will make small swing. And Euro also, they will make only a small swing. CHF, they will form up. So you can just watch how they are doing it and understand. Swing is the one which they do it between the high and the low, or near that of the high, or near that of the low. And that will be for about 10 to 15 pips or 25 pips. And that is referred as a swing without breaching the high or the low. So you have to take an entry near that of the high when the high has not been breached for more than 30 minutes. And if they are in the middle level, then avoid taking position. They are near the high or near the low around 3:30 GMT or 30 minutes past the session start time, then you try to take a buy near that of the low or sell near that of the high. If they breach the low, like what they have done it in GBP, see whether they are coming above that of the initial low for 30 minutes, another 30 minutes. If they don't come, then you understand it is an intentional move on the downside. They are making it slowly, they make tip by tip. And to confuse the traders, they firm up one currency and just make another dip in another currency. During that of the European session, you will notice that Euro was making a dip and GBP was gaining in order to drop Euro GBP cross. And now you find that Euro is holding and GBP is making a dip in order to gain the levels in the case of Euro GBP cross. So that way to handle the process, they make such moves, and also this net change indicate that they are busy handling the crosses. So as a result, now it is about 14:24 GMT. So Euro we will avoid, GBP we will try to take a sell. 1.5377 will be buy stop. $30 pips above. Then USDN, we are avoiding it. And CHF, we will try to take a buy position. It is making a firm up. So we'll try to pick a buy limit order. $0.9704, just about 3-4 pips above that of the current market level. When they make a dip, then we will get a fine-tuned entry. Then we will keep the sell stop. $0.9674. So these are all the three positions. One sell I had taken the position, and the two limit orders I have kept it. So one limit order in the case of CHF, Euro and USD I avoided taking positions because not much of a headway is expected to happen. So if you got any question, you can ask me. I will answer to those questions which are asked here. There are some questions in the questions window. Then Mario has got some questions. Can we apply similar principles of your theory to that of the indices? No, sir. How can it be applied in similar way? Because forex market is 24 hours market, whereas indices are of a limited time frame. And also, this is based on the global market wherein the players make such moves. But in the case of indices, the local players, they select a few stocks and then try to rig such stocks. And they don't handle all the stocks. But in the case of currencies, they handle all the major currencies. So there is a difference. And in the case of stock market, you do come across very similar method of operation. Basically, they have to be cunning. So as a result, they will pretend as if it is going to drop. But the only thing is they can extend the drop. And you should be able to find out when you have to do the bottom fishing. Then you should be able to really take it. So the best way to do it in the case of stock market to avoid all complications is do delivery-based trading, so that absolutely no issue. Even if they drop further downward after your entry, and definitely they will make a rise at that time you can book profit. Then the buying and closing of positions within the same day. Yeah, we can do it as an intraday trade, but the webinar is placed in such a way that I have to come back by part 2. I have to come back by your session and give the part 2. So I have to close the position and show the results. And also to give the impression that within the session we should be able to trade, not necessarily we should hold the position throughout the day. When you can hold the position throughout the day, when they are making intentional move. Simply if we hold the position throughout the day, it's of no use. And many people hold such positions which are making loss. Holding the loss-making position is not greatness. That means you are praying to God that the market should move in your expected line provided, and you have become emotional and taken the wrong directional position. And for that, every day God cannot come and help you. He will try to test your patience, and also He will try to give you the chance to understand the market. If you don't still understand, you think that you are correct and the market has gone crazy, then you will never understand the market. Then, a trick. Great stuff. Thank you. Where can we learn in detail about your theory? How are we able to use it in our own trading. Sir, in FX Street, in 2010, I given a series of webinar called My Trading System. You kindly go to webinars and click on my picture or Dr. S. Sivaraman. You will come across my profile displayed. In that profile, you will find 2010. If you click, all the 10 webinars what I had given it in 2010 are listed during the 10th anniversary of FX Street. And there I explained from start to the end my trading system. And if you go through all those lessons and follow every day the forecast, what I give, and also, the forecast for the week I give, and also the trading strategies I explain in FX Street, you should be able to develop your own method of trading at ease, without any difficulty, without any ambiguity. You will be able to trade. And you will not ask every analyst whether euro will go up or euro will come down and things like that. And some will say euro will go up, some will say euro will come down based on other studies. So you get confused and you want the analyst to say in line with your expectations. And finally, you tell the analyst that, no, I am expecting euro to go up. But the analyst would have been telling you that euro will come down. So you try to teach the analyst in the process, and it shows that how timid you are. You do not want to change your mindset, and you expect all others to follow you. But your trade happens to be a wrong trade. So always understand that as human, we have the limitations. So you have to always use the measures to limit the risk. And that is why I insist upon the trading strategy and also usage of the hedging facility. But unfortunately, in US, they say if you want to use hedging, you do not know the trade. That is how they are given a wrong interpretation, and they avoided US citizens to go in for a trading. They know very well market is totally manipulated. In FX trade, is it always easier to learn from the illustrations rather than raw data? See, there comes the difference. So illustrations are given when you are doing kindergarten, to show the picture of an infant, you show the picture of a lion and things like that. And later on, nowhere in the textbook we come across such illustrations are given. And especially if you go to the higher level of education, hardly you come across any illustrations. All descriptions are there. So you have to come out of that kindergarten and go to the higher levels of understanding using the actual price action. What's the difficulty in understanding it? Only thing is, you think that you have to continuously monitor in the charts. You find already the charts show that. That shows you are not focusing on the market. When you are not focusing on the market and you want the chart to indicate or give an alert, you set an alert in the chart and the chart simply say that go and sell. And you think that every day the sun rises at the same time. That is what you think. And it is not so. And if you carefully watch, it is not the question of sunrise. It is a question of the rotation of the earth. And because of that, it appears the sun rise and drop. So you should come out of such illusions and practically think that we are a speck in the ocean. We are a speck in the surface of the earth. And the earth is making a rotation and the revolution. Because of that, we are able to see the day and night. So all those things you will be able to understand. Then you will also understand that in order to follow the market, you have to use the GMT time frame and not your local time. See, forcibly, all the platform providers and also those who have structured the market, they try to give the impressions to the traders that market cannot be manipulated. And it is a huge $4 trillion market. So nobody will be able to have a control over the market. But when you find that FOMC minutes are to be out or the decisions are to be out on Thursday, and you see the market on Tuesday, hardly it makes any move. And you can say that people are watching and they wanted to take the position after the FOMC. But if you see just announcement, 10 to 15 minutes before the announcement, the market will make up and down move in a very quick way. And who is doing it? And you and I will not be able to do that. You just, when the market euro is around 1.12 or 1.1300, you cannot place a buy order at 1.1325 and push the market on the upside. Only in the banks they can do it. And why they are making such moves, and they have got specific the trading methods by which they can push the market on the upside and the downside. When they are capable of pushing it up and asking the other banks to sell, that is one of the style of operation. That is pump and dump moves. No, they always talk about the pump and dump or dump and pump and things like that. You may not be able to understand, but they are the manipulators in the market. And when they are manipulating the market, they do the circular trades. 2/3 of the market volume is nothing but the circular trades by which they don't make any money. Now you can understand the market is fully manipulated. And in that process, all charts will only misguide. If the market is not manipulated, then you can understand the statistics will really work. When it is manipulated, none of the statistics can work. You have to understand the limitations. No, always it should be an unbiased estimate. If it is biased, the statistics will not work. Then Mano. The high-low we always take from 2 GMT onwards. No, exactly by close of 3:30 GMT, you can note down. They start setting the high and the low. Probably by 2:30 they set the high and 3:30 they set the low. That sort of things they do it. But finally you have to note down by 3:30 GMT. Follow the market in GMT time frame. Then you will be able to really understand how they are manipulating them. Get rid of all conventional things which are taught to you, and they unfortunately happen to be misguidance. I cannot help it. Being a statistics professor, I feel very sad that statistics does not work in the market. And after so much of research, postdoctoral work, I found that none of the markets are able to obey to that of the statistics. We can simply say that, no, at this particular time frame it has followed their Fibonacci retracement, or at this particular time it has followed their parabolic curve. Can you continuously monitor the market with one statistical method? Then you will understand it is not. Then comments. Now we can take any position, please. Let's well, yeah, okay. Then there are some questions in the response video. Then Tetu has got a, is it recommendable to take positions in all 6 majors at the same time? It is not advisable. You take only, it all depends upon your equity. So don't overtrade. So if your equity permits out 1% or 2% of the positions you can take, then you can take it. Then accordingly, once you are able to keep stop at entry, there is no risk in that position. Then you commit another position. That way you can continue to take positions. Then surely. They are holding USD CAD and dropping Australian dollar. Yes, they try to do it. That's what, when they are making upward stop and then downward stop, then it is in a narrow range market. It is very difficult. And that too, when they are doing contrarian moves, I told you, if you take positions in majors, it will be testing your patience. Instead, you have to recognize by identifying the type of moves, which currency you can take positions, and those currencies will be able to show you the profit. And you find that euro is making a small dip, and in European session I had taken a sell position, and which was giving about 14 to 15 pips profit, whereas GBP made a bigger profit, and USDN showed a bigger profit. But again, now, when you commit, when they are making a contrarian move on the downside, all the 3 on the negative side, they will just firm up and dip. Then you will get struck with a higher level buy. So when it is closer to low, closer to high, we can take a sell near the high or buy near the low. But in the middle level, we should not take chances as small traders, because I'm focusing more on the small traders rather than the people who do this scalping, etc. Or big trades. They take high volume trades. Because my basic idea is to help the small traders to earn some profit and quit the market. For Japanese market timing, we use the previous day as reference. No, every day they set the initial lows and the highs, and they use it for the reference. The players use it for the reference. That is why I'm insisting you to note down. I cannot explain more than that in a public forum. Is there any other questions that I can answer? Okay, I have given my contact details here. So the positions what I put down. So here you find that GBP I took a sell position, and in the case of USDC, I kept a buy limit order which was not filled. Only GBP position I have, which is almost around the same level. So slowly they might come down, but GBP they will make more drop when compared to Euro. And that way, we'll be able to make a definite profit. And also in the case of Australian dollar, as I was telling you, that they will make a drop, they are doing it. So understand what sort of moves they are doing it, which you'll not be able to understand with the help of the charts. Only when you look into the live market port page and compare it to the initial lows and the highs, you'll be able to identify it. And you don't require a continuous monitoring. You casually note down the initial lows and the highs, and just after 30 minutes, 1 hour. And I noted down during Japanese session, 3:30 GMT. Now I am making a comparison to take a trade. Now I need not continuously monitor the market. When I am in US, I will not be able to monitor the market during the European session. But still, my late night, it will be Japanese session. I'll note down the initial lows and the highs, and I'll come back by US session or late US session and try to find out what trade I can do it. When they are making contrarian move, I'll just skip the day. When they are making intentional move, and that too, all the currencies are showing USD weakening or the USD gaining move, I'll try to continue to take the position. At that time, they will extend the intentional move if it is on the downside or the upside during the US session. So I'll have 100% profit. Hope you're able to understand how we have to read the market and do safe trades. Simply speculating, simply telling that I'm doing breakout trade or I'm making buy around that of the support, sell around that of the resistance, etc. Those things, the players are trying to track. So if you follow and take the positions quickly, or keep limit order and take the positions around the support, a buy position, keep the stop, probably 100 pip stop below that, so that risk reward of 1:3, you might find the stop is being hit. So don't take such chances, and especially the players are here to trap the traders. When they are very aggressive in trapping the traders, we should not become the scapegoat of getting trapped again and again. What is the big idea of telling that I'm trading for 5 years, 7 years, and getting trapped again and again? We have to become smart, and we have to learn the art of trading. And one day we should start making the profit. That is my humble suggestion for the small traders. So if there are no questions, then I'll wind up the webinar. So these are all my contact details. My website address I have given it. You can contact me through the email, dr@i-noindices.com. My Skype chat ID is iknoindices@hotmail.com. You can contact me through Skype, but do only chat, but no calling, because I'll be handling several chats at simultaneous time. And the Yahoo chat, if you are familiar, then iknoindices@yahoo.com. Then my phone numbers are there. If it is very urgent, you can call me. And this Thursday, I'll not be able to make a review of the forecast because of some other commitment. and it's a festival in India. So I will come back on Monday and give you the forecast for the next week. So until such time, wish you all happy trading and monitor the trade. What I have taken, you will be able to really see that profit is achieved. So that focus on definite trades. So I take this opportunity to thank FX Street for the facilities provided and also you people for kind attention and listening to the webinar. Wish you all happy trading. Thank you.